Alright, for this video I want to go through a sample form 1040X amended U.S. income tax return, and this is going to be for the 2023 tax year. Now in this scenario we have John Taxpayer here who needs to file an amended return because he incorrectly categorized a traditional IRA contribution as a Roth contribution. So he needs to fix his return to correct for that mistake. So I've got the sample 1040X here, which we'll go through. We've also got the 5498 from the trustee, and then we've also got the original 1040 that was filed by John that needs to be corrected. And then lastly, just one slide here covering some background on amended returns and then the details on the fact pattern. So the amended returns, it's important to remember there's a distinction between an amended return and a superseded return. So amended returns don't replace the original return. They're filed to correct for an error or omission that was included on the previous filing, or in some cases you can file for carryback claims for credits, taxes, or NOLs. Now the amended returns can generally be filed any time, but there's going to be certain statute of limitations that might apply if you're trying to get a tax refund. Right, so refund claims, generally they have to be submitted by the later of either of these two dates, so 3 years from the date you originally filed or 2 years from the date you paid the tax. So if you need to file an amended return because you effectively overpaid in tax, make sure to get that in as soon as possible, because if you file after those statute of limitations, the IRS keeps your money, right? They won't give it to you. Now superseded returns, on the other hand, are not amendments. They actually replace the original return completely. However, much more narrow time frames on these superseded returns, right? They have to be filed after you submitted that original return, but before the filing deadline, including the extension. So if you've waited for, let's say, a year beyond the filing, well, you're going to miss the superseded window, right? It has to be within the original due date, or if you file an extension, you can get it up to the extended deadline. Now, the fact pattern we've got here, we've got John Q. Taxpayer. He's a single filing taxpayer working as a consultant, and he timely filed his 2023 Form 1040 on April 10, 2024. He did not file an extension request. All right. Now, during that 2023 year, John opened a traditional IRA and put $5,000 cash into that IRA. The custodian correctly reported the contribution on a 5498, but on John's original 1040, he incorrectly treated this as a Roth IRA contribution rather than a traditional IRA contribution. So he needs to amend the 1040 to correct for the mistake. So what are we talking about that happened here? So if we look at his original return here, what he did, normally when you make a traditional IRA contribution, you are entitled to a deduction on Schedule 1, right? So Schedule 1 has traditional IRA deductions, but we can see here there is no deduction, and that's because he reported this as a Roth IRA contribution. So he did his maximum Roth IRA contribution worksheet to see whether he could put anything in, and he was able to contribute because his income was below those relevant thresholds, but there was no deduction of the traditional IRA contribution because he treated it as a Roth. And so what he needs to do now is file the 1040X to correct for that. So the 1040X here, you input the tax year that you're changing up here, so 2023, name, social security number, address, the filing status that John uses is single. And so now we have columns A, B, and C where we report the original amounts as they were filed, the correct amounts in column C, and then column B is the net changes between those two values. So the original amounts, we just look up these figures using what was reported on the original return. So the adjusted gross income, his standard deduction, taxable income, the amount of tax he paid, and then the amount of federal withholding that was taken out on his wages. So you would look at your original return, you're looking for your AGI figure, the standard or itemized deductions, whichever you took, your taxable income figures, the total amount of taxes that you calculated on that taxable income, and then the amount of withholdings and other payments that you might have applied there. Now on line 6, where it says enter method used to figure the tax, we are using the qualified dividend capital gain tax worksheet. And John had to use this because he has some qualified dividends and capital gains. And so you can't just use the regular federal income tax tables. You have to use the qualified dividend capital gain worksheet to figure the reduced rates on those amounts. So he's got the original amounts here in column A. Now he moves on to figure out what are the correct amounts that should have been reported. Well, if we have a quick look at the 5498 here, we can see that for the 2023 year, Box 1 IRA contributions are $5,000, and this is a regular traditional IRA, right? It's not marked as a Roth IRA. So on his amended return, if he prepares the 1040 again, what he's going to have change here, there's going to be no changes to his income up here. So wages, investment income, all that remains the same. His capital gains remain the same. But now he needs to figure how much of that traditional IRA can I deduct, if any, right? Because remember, there are non-deductible traditional IRAs where you would have to complete the 8606. So if we have a look at the worksheet here, so his IRA deduction worksheet, so he is covered by a retirement plan at work, so he marked that as yes, and then he completed the rest of the worksheet to figure out how much, if any, of a deduction he could take on those traditional IRA contributions. Now, when he gets to the bottom here, he notices that, okay, after doing this calculation, the maximum I could be able to deduct is $54.60. Well, the amount that he actually put in was $5,000, so he's going to get a full $5,000 deduction for that traditional IRA contribution. All right, great. So he would go back to Schedule 1, where he reports in Part 2 that he has a $5,000 IRA deduction. And so that is going to change obviously his taxable income for the year, and then the amount of tax that he's going to owe. So you're changing taxable income, you're changing your tax, and so those numbers now need to be reflected on the 1040X. So he updates his AGI. The standard deduction remains the same. Taxable income is down by $5,000 as well. And then the recalculated tax, $7,267. So there's an $1,100 reduction in tax because he had this IRA deduction now. All right. Now the payments, that remains the same, right? He didn't have any other withholdings or estimated payments that he missed on the original filing, so that remains the same. So line 18, this is the original refund that he claimed on his 1040. So if you have a look at the original filed 1040, we can see $1,633 there. So he's got $1,633. On line 19, we subtract line 18 from line 17, and we're left with $8,367. Line 20 would have a field if we actually owed tax. So if line 11C up here, if line 11C is more than line 19, enter the difference, and that's the amount that we would owe in tax. In this case, line 11C is lower than 19, so we subtract the difference and we're left with $1,100 reported on line 21. Now he's elected to have this refunded to him rather than applied to his next year's estimated tax. So by filing this amended return, he's going to get an additional $1,100 back from the IRS. Now, page 2, we have to include some additional details as well. So part 1 is empty because he doesn't have any dependents. But he does complete part 2 to explain the changes that were made. So the amended return corrects the reporting of IRA contributions. The taxpayer made a $5,000 contribution to a traditional IRA, which was reported on the 5498. On the original Form 1040, taxpayer incorrectly reported the contribution as a Roth IRA contribution. The taxpayers enrolled in an employer-sponsored retirement plan. That detail is important because that impacts how much of a deduction he can claim, right? That's why you have to do the 8606 worksheet. The taxpayer's income is below the relevant thresholds, which qualifies for a 100% tax deduction for the $5,000 contribution. Enclosed is the IRA deduction worksheet, Schedule 1, line 20. Total taxable income decreased by $5,000, resulting in the tax reduction of $83.67 to $72.67. So just lay it all out there and then I like to include a copy of the return, mark it as amended. So they know that, well, this piece doesn't necessarily get processed, but it shows the updates that we made. And then you include the 8606 deduction worksheet. Even though if you filed this as an original return, it wouldn't get submitted to the IRS. But I think it's helpful just to show that, okay, look, we made a traditional IRA contribution. We have done the math to figure out that we can actually deduct the whole amount. All right, so it never hurts to provide the IRS with more information just to make it easier to get this thing processed off their desk, and so you can get your money as quickly as possible. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, feel free to leave a comment below, and I look forward to seeing you on the next one. Thank you.